The US-Iran war is on its sixth day right now, and it doesn't seem to be stopping anytime soon. We are actually seeing US oil tanker being struck in the Gulf, the Strait of Hormuz closing, and these are all pushing oil prices above $80, which is also sending the indexes in the US lower. So in today's video, I'm going to walk you through exactly where we are now with the US-Iran war, Trump's response to it, and we will also look at the new US restriction on AI chips that is hitting Nvidia and AMD. Now, if you enjoy this kind of market update content, do subscribe so you always be kept updated of the next video. Now, let's get started. Now, let's start off with the S&P 500. As you can see right now, we are technically still within range of what has been happening since back in December. But we are starting to see some things happening over the past few days, which is the price is actually breaking this 100 exponential moving average, the 100 daily EMA, right? As you can see, even though on Tuesday it actually closed above it, but the price actually did went down and break below. And even yesterday, it went below the line, but it managed to close above. And when we look at the Nasdaq, we are seeing a bit of similar picture. In fact, this is a little bit different. There's a little bit more signs, even though it is still trading within the range. You can see that right now there's this indecision between the 100 daily EMA as well. And the price is not sure whether to stay above or stay below. So you can see it's a battle between the bulls and the bears right now. And we are seeing a very similar picture on the DJI as well, the Dow Jones. But something to take note is that the price has finally broken below and closed below the 100 EMA, which was previously back in November, it was held on as a support, but right now it has closed below, right? And I think this is a sign that it's something that is a little bit concerning, even though we are definitely still at this support area from back in December around here. But the fact that it has broken down below the 100 daily EMA shows that volatility is still the name of the game. And the market definitely seems trapped between this area for all three indexes at their respective price. And right now, despite whatever three indexes that you're looking at, it definitely seems like both the bulls and the bears are getting thrown around inside it. And still, the bigger picture still has not changed. Market sentiments definitely still remains risk off. And the main driver, it continues to be geopolitics, especially the escalating war that we are seeing with US and Iran. And the war has now entered its sixth day, and the markets is definitely becoming increasingly sensitive to anything tied to energy supply. And this catalyst was linked to this US tanker in the northern Gulf, which was on fire after reported strike. Okay, it was struck by a missile and it caught fire. So this was one of them. And another one that was actually reported was that the Iran actually claims that the USS Abraham Lincoln was struck by drones in the Sea of Oman, right? So these are the news. We are seeing these kind of vessels, regardless whether they're oil or not, they are being attacked, and these are US vessels. And on top of that, what has the market been talking about and been consoled over the past few days? It is the Strait of Hormuz. And as you can see, from February 28 leading on to March 1st and March 2nd, notice how the traffic has actually reduced drastically, right? Look at how February 28 there were a few ships that were moving across the straits. March 1 it reduced, and March 2nd it's basically just one or two. And vessel movement through the straits has basically come to a near total halt of reducing to more than 90%. And this is a video of a few hours ago of how the Strait of Hormuz looks like in real time. As you can see, the strait is basically empty. There were no ships going through the strait, us either staying on one side for fear of attacks from Iran. And all of what you saw earlier are pushing oil prices sharply higher. As you can see, WTI crude oil, it is currently testing that resistance of $80 that was formed back in January 2025. But right now you can see it is pulling back. So this resistance is holding up very, very well. And when we look at Brent crude oil, we are also seeing the price approaching this resistance from back in June 2024 at $88 over here. So, will it break? Will it not? It's hard to say because of how the geopolitical tensions are still very fresh. If we start to see a lot more tankers, US oil tankers or ships being attacked, and the Strait of Hormuz, even though now is down 90%, but we see it being prolonged, that is going to lengthen even longer, then do expect oil prices to push higher. Otherwise, if there was some sign of relief, we do might see these levels of $88 for Brent crude oil and the current levels of WTI crude oil retreating back. Now, why is oil prices increasing concerning everyone? Because it revives fear about inflation. Higher energy prices do not just hurt consumers, it also hurts businesses through margins. It also pressure transportation and industrial costs, and it potentially increase the odds of what we call a stagflation style, which is the worst case scenario where inflation rises while growth slows. Now, that's not it, right? Trump also add fuel to the move, and in an interview, you can see that he said that he is not concerned about rising gas prices amid the Iran war, and that military objectives were more important. And the market took that as a signal that this geopolitical escalation may continue, and it is the White House which is not especially focused on calming the energy market right now. And that is what investors are watching the most. It is not just the war itself, it is whether the conflict actually expands into a broader threat to shipping lanes, tankers, or key energy infrastructure. Because as we see the AI build up right now, everything requires oil. And this might actually delay production, it might actually increase costs. And if that happens, if we see this conflict expanding, oil can actually move even higher quickly. Another important development is actually the growing role of low-cost drone warfare. There are reports coming out saying that US is finding Iran's drone that is harder to deal with, bigger problems than anticipated. And these one-way attack drones that Iran is sending can cost maybe 30,000 USD each, but the US is using interceptor systems that is costing millions of dollars to take them down. And because of that, the Pentagon and some Gulf allies are reportedly considering Ukraine interceptors to take down Iranian drones. So these are all lower cost counter drone solution, and it might sound like more of a military detail, but this affects the market and the markets care about it because it also suggests that the conflict may not end quickly, right? Markets are just looking for signs to know and wonder whether will the conflicts end soon. And in fact, internal assessments are now pointing to the possibility that these operations could last for months rather than days. Even Trump himself has come out and said that they are ready to fight for as long as few more weeks, for 4 weeks or for months. And looking at volatility, we can see that even though it is not as high as what we saw a few days ago when the tension first escalated, and that is that resistance point that the market is looking for, there is some levels of the TA actually, the technical analysis of VIX actually cooling down, but it rose again and it's actually still staying at an elevated level at 23. So what level of VIX will we consider to be much more where the market is more stable, which is below 20, actually around from, I would say, the 14 to 18 region. But right now, we are still in elevated territory and it's failing to break below 20. And the message here is pretty simple, is that the market is still feeling nervous and sentiments can definitely reverse fast on any new headlines. And outside of the US, the wildest action actually came from South Korea. In fact, Asia markets were down over the past few days, but specifically for South Korea, they were actually down negative 7% on one day, and the next day they were actually down over 12%, and both days triggering a circuit breaker, which is a trading hot. So this is unprecedented that we have never seen this in over the past few years for South Korea. There has also been this strange relationship lately between Korean stocks and Bitcoin. When Korean equities sold off, Bitcoin rallied, as you can see. And the same thing happens in the opposite way, right? When Korean equities rally, Bitcoin was down. Now you can see the reason where Kospi was actually down 18%, Bitcoin actually rallied after trading in the range. So it feels like retail money has been rotating back and forth between crypto and Korean equities, depending on where the momentum is strongest. And when we talk about Bitcoin, you know what? We've seen that Bitcoin actually broke past its barrier, this 70,000 barrier, 2 days ago on Wednesday. And right, even though it was the highest since February, and you can see right now it's struggling to actually hold it above, where it actually tested the 50 days EMA as well. So you can see right now that yesterday the price actually pulled back, and now it is, for now, it is still holding the 71K. For more momentum on Bitcoin, where we can see more of a confirmed momentum, is when it has gone above this area over here, which is the 50 EMA line. And that's where we know that this is more of a confirmation that the risk on asset people are more risk on. And otherwise, what we are seeing now, it might be some sort of a fake breakout if Bitcoin actually trends below 70K once again. Now, let's talk about individual stocks because we did actually saw some pressure that the US government is preparing a rule that will restrict AI chips shipment globally without much US approval. And basically, in plain English, right, if a country wants more access to American AI chips, they need to invest in more US data centers or strengthen strategic ties with Washington. And this is affecting companies like Nvidia and AMD. And emotionally, this might sound bad. But from a business standpoint, the real impact might be smaller than the market initially fears. Why? Because Nvidia's largest customer are still primarily US hyperscalers like Microsoft, Meta, and OpenAI. So yes, it does create short-term headline risk, but the medium and long-term story still comes down to one thing. Does AI infrastructure demand, will it continue to grow? Now, when we look at Nvidia and AMD, how did they react to this news? Early on, when this news was published, they actually sold down all the way for Nvidia. It was down all the way to $178. But throughout the day, it did recover and close positive, close in the green, and staying above their 100 weekly EMA line. But for Nvidia, you can see that they are still trading within the range of where the support is around over here. Still trading between the range of 170 to 195. And but when we look at AMD actually they also affected. They were one of the main companies together with Nvidia that were affected by this AI news that we saw yesterday. It did also went all the way down to 195, but and it actually closed up as well, but it closed the day red and it did not recover to green like what we saw Nvidia. So they were also pulled down by this same export control headlines. Now, Broadcom, on the other hand, stood out as one of the day's winner. It did close at 5%. Yesterday, the company delivered a strong quarter and reinforced the views that AI chip demand is broadening beyond just GPU. Now, you can see in terms of the technicals, it did actually try to break above the 50 and the 100 daily EMA, which is at the same area. But it did manage to actually close below. And for more sustained momentum, we do want to see a close of them above 135, above the 50 and 100 daily EMA. But in the long term, right, based on how they reported their earnings, they actually reinforced that the view that AI chip demand is just broadening beyond just GPUs. Management said that their AI revenue business is on track for the massive long-term growth, and that helped the stock actually buck the market sell-off that we saw. Now, this is an important signal because it tells us that the AI trade is no longer just about Nvidia, and demand is going to keep increasing. So yes, in the short term, there's definitely going to be some volatility based on the headlines that we saw, but in the long term, demand is still very strong. It is still going strong. Now, I talked about Broadcom's full earnings yesterday in a separate video. I will link it in the description box down below in case you want to watch it. Now, when we look at what is coming up today in the market, there are some macro data that are coming out. Two most important ones are the non-farm employment change as well as the unemployment rate. See, so this non-farm employment change is where we're looking at US payrolls. And as you can see right now, the total non-farm payrolls for February 2026 are projected to rise by 60K. Now, January, we had a very nice surprise. That it was a nice surprise that non-farm payrolls was 130K. But more than just the reporting of February's results, the data, markets will also be looking at the revision because whenever they report data for the month, they are able to revise the data for the past few months. As you can see, there were certain months that there were no jobs being added, even though initially it was reported that there were new jobs being added. So this is the first one. The second one is unemployment rate. Okay, so as you can see that for the Federal Reserve, what is their goal? Their goal is to bring down unemployment while ensuring inflation is at this manageable pace. Now, the recent data that we saw is that inflation is on the slightly higher side. And with the geopolitical tension that's ongoing now, it might potentially push inflation higher. Now, this unemployment rate is important because if we do see the unemployment rate increasing, that will increase the fears of what the market don't want to happen, which is stagflation. Even though that might be happen down the road many months later, but markets will react to the immediate fear of them thinking inflation is high, unemployment rate is higher, right? So right now it's expected to hold at 4.3 at what we are seeing now. And if we were to see some sort of breather in the market, we do want to see the unemployment rate coming down. Now, to sum it up, yesterday's market was definitely driven by one core theme, which is the rising geopolitical tension, which is definitely not ending anytime soon, and which is sending oil prices higher and directly into inflation fears, as well as weakness in stocks. And as we can see, despite everything that we've seen, all the volatility that we've seen in this year alone, the index is still trading sideways, right? They are not showing that signs of cracks as of now, right? Even though we are seeing the Nasdaq actually showing them earlier. So that might be a sign of being at this stage, do not be super aggressive right now. And the market is definitely still highly headline driven. And oil is the key swing factor right now. Oil prices will be something that we monitor closely, which is the tensions and the Strait of Hormuz. What is the update over there? And what we'll see today, which is the payrolls data and the unemployment rate, is the next event that could either stabilize sentiments or it might trigger another round of volatility. Now, that's all that I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button, and it will really help me to create more of such content and also for you to be kept updated of the next video. Thank you, and I'll see you in the next one.